Okay, credit is built. All right, and that ultimately our clients will have purchase power in the marketplace. So I'm Ty Freedy here with Credit Gurus, and we focus on making sure that positive history is more inclusive on people's credit profile. So what does that mean? Basically, okay, we're building our clients' profile so they have positive history and they're empowered, they have options, they have choices, they have some autonomy, and they're going to have purchase power in the marketplace. Okay, so really quick, we're going to show you how we're able to do that and what we're able to do actually, and why we have the fastest system, okay, in the marketplace. All right, 3 simple steps. We call it the R3 system. All right. So the first, I won't even say this is the first step, okay, because this is not really the first step, but this is what people know as the first step when they think about, credit repair or financial services. And it's really not the first step because credit is built. That's what makes us different, okay? I'm going to start right here where it says restore. Restoring your profile. Why? This word is biblical. It's listed in the Bible over 128 times. So it's about restoration. Credit is built, okay? That's adding points. That's trade line experience, right? Okay, that's 35% of your payment history. It's all about trade line experiences, right? Relationship-based banking, adding primary trade lines, adding authorized user trade lines, okay? Getting a credit limit increase. Did you know you can increase your credit limit every 91 days? People sell 6 months, but it's really every 91 days, okay? That's adding secure cards. It just depends on where you're at, okay, in the credit process, okay? It's all about restoring your profile, adding points. Credit is built. Repairing, as you see above, okay, that comes without saying. All right, this word is also listed in the Bible just over 24 times, maybe 24 to 28 times, okay? And that's your ability to be able to identify, okay, anything that's inaccurate, unduly, you don't recognize. You can always get that repaired. Why? Because that's human error. The FCRA law says everything on our credit profile is supposed to be 110% accurate. So it doesn't matter if that account is yours or not. It should be 100% accurate, and you have the right to ask them to take a look at it and prove it. Okay, but that's your ability to be able to identify bad addresses, identify anything that's derogatory, adverse, right? Anything that's red flaggish on your credit profile, okay? Inquiries, any aliases, anything that doesn't represent you, okay, and is not consistent across the 3 credit bureaus, you have the right to challenge it. That's called credit repair, identifying derogatory items, adverse items, okay? This would be considered last here, and this is called redeeming. This is also a biblical word, okay? I didn't make this up, okay? This is your ability, our ability, your ability to be able to create leverage in the marketplace. What do you think? All this time, most people, they want to go from repair to redeem. Like it really doesn't work like that. Those are old methods. They don't work. They won't work. Credit is built. It's about having great banking relationships. It's about knowing what banks to work with, what banks to create leverage and create a great relationship. Having high limit credit cards, if that's what you want, you should want that. Just be disciplined with them. And it's about being able to take your credit profile, your credit score, and create leverage using credit as a tool. All right. A lot of times people focus a lot on their score, and that's kind of how we were conditioned. We were trained. It's about your FICO score. Some people call it a beacon score. However, your credit score, your FICO score is important, but is not as impactful as your credit profile. Your credit profile speaks the language of approval or denial. Your credit profile that's your progress report, okay? Your credit score is your GPA. They should be in alignment. So that's why it's very, very, very important that you create an attractive credit profile. And that's what we're able to do, with the clients that we work with. That's how we're able to move so fast. That's how we were able to crack the credit code. We have the fastest, most impactful, and flat out, we just have a better system. A better system. Old tactics, old methods, they don't work anymore. They will not work. It's all about the language. Let me say it like this. Everybody's credit report speaks a different language. Everyone's credit report speaks a different language. You guys can have the same score and apply for, the same kind of credit card, and I get denied and you get approved. It's the language of the credit profile. So, why do people get denied? Besides score, besides any derogatory item, sometimes you may not have any derogatory items on your credit profile, meaning there's no negative items there. You have a really good score. Let's just say you have a good to excellent score, a 785. I remember I was getting declined and I had a 786. I couldn't understand why. There's 3 components why anyone can get denied, declined, qualify for low limits. One of those components is called a thin profile. A thin profile means you must put some muscle on, okay? All right, you must put some muscle on your profile, meaning you're under 10 positive accounts reporting, meaning you're not playing in the game, you're on the bench, okay? So you wanna be anywhere from 10 to 21 positive accounts. This game only works for people who are proactive. Strategically proactive, okay? Another component why someone may get declined without even having any negative items, but it's just as good as having a negative item, and that's not having comparable credit. For example, if you apply for a credit card, a $5,000 credit card, you might feel like, hey, I want to apply for this credit card. They keep showing up in my inbox saying I potentially qualify. They keep marketing to me, so eventually you fell for it and you apply. Well, let's just say you get approved, but they only approve you for $1,000 or $500 secure card. You're like, what the hell? It's because that's the only thing that they see that you have that's comparable in terms of revolving accounts. It's like almost industry specific. Like when you apply for a credit card, they're gonna look at your FICO Bank Card 8 score. How are you doing with credit cards, right? If the only card you have, the highest limit is $500, and that's where you're at, and that's all they can compare, their decision to, then you may even get denied, or you may only get the $500. So that's lack of comparable credit. All right. Lastly, a reason someone may get denied, declined, a super low limit, it doesn't make sense, you feel offended. It's called insufficient credit. Insufficient credit means the lenders or the credit bureaus or both of them in between, they don't have enough data on you. That means you're not playing at the game. They don't have enough information. There's insufficient information on you for them to make a lending decision. So sometimes you won't even see a score there. It'll say non-available, if anything. You might have a score for Equifax, a score for TransUnion, but for Experian, it's just blank. Because that means Experian, there's insufficient data on you. They don't know who you are because you're not active. Remember, credit is built. It's about really having a structured credit profile. That's more important than any score. That's more important than having good credit. That's more important than just, what your bank did for you. Like understanding how credit works, that's the real superpower. Because once you understand how credit works, now you know what you want credit to do for you. Right? So you have clear-cut goals because clarity is power. All right, we look forward to working with you. Hope that was helpful. If you have any questions, feel free to shoot us a message, give us a call. Yeah, that's what it's about. Purchase power in the marketplace. All right.